What the fuck is I'm doing? Like, what the fuck? I just blew my shit. I was about to start a new. Nah, we're gonna keep this shit raw. Let me keep this shit raw. So today, all we're doing is going over news, news, and what you need to look out for. So I want you guys to bookmark this website called forexfactory.com. What forexfactory.com is, it gives you kind of the outlook for the day. It gives you kind of an idea of when not to trade and when to trade. You might hear often big time traders are like, oh, don't trade red news days, don't trade news days. That's complete utter bullshit. You want to trade news days. That's when the volatility comes into the market. That's when the big moves are coming. That's when the market is going to move. The time you do not want to trade is when news is about to drop, or it is dropping at the current moment you're on the chart, or oftentimes like before news. Or also there are some days that people advise not to trade, like there's certain news days that cause the market to kind of just consolidate and just give bad price conditions. But in my opinion, my humble honest opinion, brother, I would say give it trade every day when you first start and get a feel for the charts every single day, no matter what news event it is, to kind of put yourself in those conditions and get an understanding if trading those days are for you or not. So don't hear me say, okay, I'm not trading on this day because of this news event. Take a look at the charts for yourself, forward test it, back test it, do whatever you want, and see how. Oh my, look, hold on. My bad. I just see my shit's glistening. I got a little manicure. Fuck is you talking about? Y'all niggas girls ain't giving y'all no manicures, nigga. Get your girl up, nigga. Get your girl up, nigga. Fuck is you talking about? Anyways, um, for like, just put yourself in the water and see how you react to those certain news days. Don't just listen to somebody that says, okay, it's this news day, I'm not going to trade it, so then you don't get the experience of trading that day. Get your own experience. This is your own battle. Just because that person can't trade on that news day doesn't mean you can't. See if it's statistically you have an edge in those market conditions. Like if it's, for example, a news day that people don't trade is FOMC days. If you see like someone like myself, or you see someone, or you see just somebody out there saying, "Oh, don't trade FOMC, don't trade FOMC," don't just not go on the charts that day because fucking JoJo said, "Oh, I'm not trading FOMC." Nigga, go on the charts, trade that day, back test it, forward test it, and get an understanding of those market conditions and see how your model, how your edge plays out in that condition. All right? Okay. So now, forexfactory.com. It shows you all these different economic events. If you guys ever took econ, you guys would have an understanding of what the economic events mean. I'm not gonna go into that because I'm not a fucking econ teacher. Not that shit does not matter. But all you have to look out for is the USD. As you can see, it says currency right here. You look down, USD. You could even filter it if you want by pressing this button right here, filter. What I like to do is take out the orange folder, take out the yellow folder, leave the gray folder, leave the red folder, take out AUD, take out all these, only leaving USD just so you guys won't get confused, and leave all these shits in, apply filter, and it will only give you the news that you guys need for that day. And so for a day like today, what I personally did is I waited until after 9:45 because price tends to clean up after news. Because volatility comes into the market, it moves the market, it takes liquidity, it draws towards liquidity because there's a lot of money circulating post news. Money, why it tends to consolidate before news is because obviously news drops, people don't know how the market is going to react or what news is going to come out. So there's not a lot of big players in the market. There's not a lot of big companies in the market because why would they put money into something that they don't know how it's going to react? They don't know what the Fed or whatever the government's going to say. So once that news comes in, then they put their money on in the market based on what the outcome or the statistical outcome of that news event was, right? So today, for example, let me show you guys a clean example. So 9:45 news. Let me open up the chart. 9:45 news, right? Okay. Okay, so we have 9:45 news, and then hold on one second. Yo, it's 11:45. So we have, my bad, niggas had cookies in the oven. Fuck you talking about, nigga? Niggas had cookies. Where's 9:45? Okay, so there was some decent price movement today before news, but my move did not come so we had market open. So this was all consolidation with bullshit. Like you don't want this is nothing there's nothing to trade here, right? So then we had a market open right here. So this leg basically the whole leg started at market open, obviously, because market open price is going to be volatile regardless. Then we drop down to the 1 minute. Come on, bro. So then we have market open 9:30, and then obviously, as you could see, if you guys pay attention and you guys are paying attention to the videos, until 9:45. What time was 9:45? Like right after and right before 9:45, it took a while for price to clean up, right? So you could see all this bullshit because news just came out, market open just came out, and those are the conditions you don't want to trade in. You want to wait for a clean setup to come, and you want to give it some time. Like sometimes, so when I first started out, I used to like to give like a good 10, 15 minutes after news to then hop in the charts because it would be a little hectic. It would be a little too fast for me to kind of understand what was going on. So there was two moves today that happened after news, the best moves of the day. So we had this inverse right here. I didn't take this, but Zay took this. I didn't think it was a good move, but he took it to data lows, which is hindsight was actually a great move. I didn't realize these were data lows. It was actually a great move, hindsight. But so we have this inverse. We're pretty low in discount, so that's why I didn't take it because we just dropped fucking miles down. So we had this move, and then this could have been a move. And obviously, you can see the best setups are coming after the news because that's when the volatility is induced, right? So we have this inverse right here, and then the target would have been the daily low for the day. This would have been the target right here. And then that would have hit like that. That would have been like a 1-6. That would have been a crazy move. What I took was I took this 2 minute to this 15-minute fair value gap because we were so low in discount. Again, another play that was after news. We were so low in discount. The 15-minute fair value gap was right here. I entered off this long right here, off this inverse. And I took it just a quick 1 to 1.3 right here to this 15-minute gap. Came up, hit it during the macro time, of course. But yeah, so I want you guys to go on U.S. Forex Factoring every day before you hop on the charts. Just look at what the news is for the day and just pay attention to what is going on when that news occurs. And make sure never to be in a trade while the news is happening. So if it's 9:44 and the news is about to come at 9:45, get the fuck out the trade. Do not be in the trade. Yesterday, 8:30 news. USD, there was FOMC. So what's really important is, so there's one day of the year that I say is hard to trade because of the news, which is the day before FOMC or NFP, the day before NFP. So we have on the first Friday of every month, we have this thing called NFP, and it's one of the biggest high impact news. Let me explain what it is really quick. It basically explains the change in the number of employed people during the previous month, excluding the farming industry. So it just gives employment outlook for the economy, and it gives you how many people are employed versus how many people are not employed. So as you can see, there was a huge forecast that the employment rates were going to increase by a ton, but obviously the actual. Oh, let me explain this. So the forecast is basically, so what you'll see before the news comes out, it will show the forecast. So it'll show what the economy expects to happen. So the forecast, what the economists were expecting to happen was that there would be 169 people that were employed in new jobs, right? 169,000 people employed in jobs. The actual is what the data is that comes out once that news hits. Once the whoever's announcing the news, whenever they announce that data, this is the number that pops up. So as you can see, the forecasted number was 169K. The actual number was 143K. So that can kind of give you, I don't really use the numbers too much, but because I just look at price action, but you could use that as like a kind of a say so to expect like bearish price movement because there's a drop in, but sometimes it just does not even correlate. But that's just to have an understanding. The actual amount forecast is what's predicted. Previous is obviously previous month. And if you want to understand the details of it, just to get some knowledge in your fucking brain, measures, it just gives you all the notes. It's pretty interesting information if you just want to learn a little bit about the economy. So one day that's typically kind of hard that I'll give a recommendation just to don't say not trade, but to kind of get an understanding if it's a day you don't want to trade is the day before NFP, so the first Thursday of the month. And it will typically have unemployment claims, I believe, at 8:30. My shit's moving slow as fuck, but just the first Thursday of the month, it was just kind of weird, in my opinion. And then when FOMC, when the Fed Chair Powell is speaking, those days he speaks at 2:00. At usually majority of the time, I would say he speaks at 2:00. So before 2:00 on those days, it's usually shit price action, and then at the end of the day, the last 2 hours, the price action cleans up like shit. Sometimes you'll catch a good day, but other than that, yeah, just those 2 days I would say take note of and just get an understanding of how to trade those days. I wouldn't say don't trade, but if it's something that's like, okay, I trade like shit during the day, then take note of that, and then maybe you won't end up trading like that those days in your career. But yeah, just get an understanding of news. Quick, easy video. Look around Forex Factory. Go back in your charts and see what happened on those days. Maybe on the first Thursday, go back to the first Thursday of the month and just get a read on what happens. Peace, nigga. I'm about to eat some fucking cookies. I made some kitchen sink junks, nigga. With a little caramel and some chocolate chips and a little sea salt sprinkle, nigga. Nigga, make your bitch some shit like that, nigga. Trust, nigga. You don't eat that